Are you a working professional but struggling to balance the workload of your career, family, obligations, and preparing for your financial future? If so, this podcast is for you. You've spent years learning your craft, and now it's time to focus on your financial future. This podcast will teach you what you need to retire wealthy and happy. Let's dive in.
Welcome to the Retire Wealthy and Happy podcast. We created this podcast to provide financial tips and tricks to help you build up your passive income and also provide methods that you can use to protect your wealth so that you can plan a better future for yourself and your family. We're grateful to have this podcast sponsored by Monument Real Estate Capital. Monument Real Estate Capital, helping you retire 10 years early through real estate investments.
Welcome to the Retire Wealthy and Happy podcast. I'm Roger Jacobson. Today I'm co-hosting with Anthony Esparza and our special guest. Take it away, Anthony.
Hey guys, Anthony Esparza here. Got a great special guest today, Dan Young. He is the founder of PC Laptops, Xidax, and the Ugly Unicorn Crypto Hedge Fund. He is a multi-year Inc. 500 winner, as well as being on the AMD Gaming Advisory Council and served on the Intel Board of Advisors for 16 years. Fun fact, he built the largest Bitcoin mining facility in Utah in 2014. And another fun fact, back when I previously spoke with him, he's on a journey to create 1 million millionaires. So Dan Young, welcome to the podcast.
Thanks, Anthony. Thanks for having me on. Thanks, Roger.
Absolutely.
There's a lot of things we could talk about, so we can just kind of like figure out which rabbit hole we're going to go down. I think everybody in Utah is well aware because of the PC Laptops name and the commercials. Not everybody's aware of all the other outside things you've done.
Yeah, maybe you could give us a quick insight to kind of your journey. And I mean, it sounds like PC Laptops was your first venture, and that kind of was the domino that started it all.
Well, the big one is I'll give you actually the quick, since the beginning story. I grew up poverty stricken. My parents were like my dad was a janitor, my mom was a bank teller, and they were immigrants who escaped from China during World War II. And I always watched them struggling, working really hard. And one of my dad's friends, Uncle Henry, ended up selling his bank for like $780 million, and he had stock options and all that. And I sat down with him a lot. And I was just wondering why a lot of my relatives were barely making it or middle class. But I had a few of these uncles make hundreds of millions, and now their estates are worth billions of dollars. How do they do that? And so he said that Uncle Henry said he won't give me money, but he'll give me knowledge. And so I used to kind of try to follow him around a little bit. And so that's why I learned how to do stuff. The big one was selling. I sold sunglasses at Venice Beach, California. When I was 14 years old to 15 years old, we'd set up a stand. We got great looking girls from high school. We put them on roller skates, bought sunglasses by the case, and we sold them for $10 for one pair, 15 for two. And the girls would just go up to couples and say, "Hey, it's bright out here." They're super cute. Do you need a pair of sunglasses? And we would make $1,000 a day at least.
Wow.
So, as long as you got a personality goes a long way, as long as you care about people. Yeah. And that was great because I was doing what I love. Got to hang out with the girls, got hot dogs and drinks and hamburgers and sun, what do you want? Then I came to Utah and started a computer company. So.
That's awesome.
I was an entrepreneur then.
Yeah.
So PC Laptops, and just chatting with you in the past, sounded like you, and I don't know what came first in this order, but you did buy a duplex. You lived in one side, fixed up the other side. Is that right? And then
yeah, I mean, the shortcut of it is this: talking to all the mentors over the years is really whatever you're doing. Usually, you'll have a money-making basic income string. I worked at the mall when I first got to Utah. Right, it was terrible money. Met some great mentors, and then started my company, one of my companies. But the big thing is with tech, there's a lot of profit velocity a lot of times very quickly, whether it's online or whatever you're manufacturing. And it's important to peel off some of that profit and buy more boring assets, more conserve assets called real estate, right? But the big one, the big thing that I think a lot of young people could do, it's harder right now in today's rate environment and the way prices are, but there's always an opportunity, is I bought that duplex. And it was nice because I was able to rent out half. And it's like house hacking, right? You take that income you have, and I paid my mortgage with it. So I lived there $150 a month net cash flow positive, which was great. Meanwhile, working on tech and different things, our company within a year, we lost 25 grand the first year. We did over $1 million in rev the next year, and then it just kept, going. So we started all these other companies. But I'd have years I'd make millions of dollars, and years where we actually lost money. So, but the years that you made millions of dollars, is the secret was just to live very within your means, right? Take that profit and be finding different investments like real estate. And back in the late 90s, one of my customers was a big stock guy or something for Merrill Lynch or something, or Goldman Sachs, or one of the big ones. And he's like, dude, you should buy a little bit of Apple. This is not financial advice, but back then he was like, you should buy some Apple, this company Apple, this Google thing, this Amazon bookstore. So he gave me like this list, 10 stocks. And so when I would have a good month, I would consistently invest in, in those things. And that turned into crypto, obviously, because the mining facility, we're not mining now, but we did from 14 to 17, made a huge amount of money in crypto and peeled off 75% in 17 to buy more industrial real estate. So it's almost like taking volatile assets. I call it almost like a 40-40-20. 40% of your income is like pretty boring stuff, passive stuff if you can get it, like real estate. It's not totally passive unless we use property management company when you have enough. So that's a good one. Then equities and some crypto exposure. I don't say go all in or anything crazy, just a little position there. And also investing in individual businesses and projects, but the most important thing is to get your core business smashing out lots of profit, or your main job first. Because I see a lot of younger people do like I want to be real estate, I want to be stock, I want to be crypto dude, I want to be Forex dude. And they end up just floating sideways for 20 years, and then they're not watching it. So they get sued because they did something wrong with the company, and then they lose everything and they just keep resetting. That's a bad way to go,
Yeah.
For sure. You definitely got to have something in your core business that starts out, takes care of the monthly nut, and then you can move on.
People know you as PC Laptops founder, especially in Utah, and I'm sure probably everywhere. But building off of PC Laptops, we haven't really talked much about crypto on here yet, Roger. I think that would be kind of fun to dive
This
down into there.
is really the first time we've had anybody that's done a lot of crypto on. So
yeah. Ugly Unicorn Fund could be interesting to learn about and see what you're doing with that.
Pretty unique. So that crypto mine we built in 2014, we had over 4,000 miners up in the first little bit, and the electricity costs were just crazy. Mining is not really the way to go. I have a few friends that try to get free gas, from landfills and methane and geothermal, but it's not really profitable for most people unless you really got it figured out. But right now, blockchain in itself is kind of like the internet back in the late to the late 90s and early 2000s. It's very new, but right now, finally, large government institutions are looking, government regulated institutions are looking at these things. There's a big amount of ETFs being applied for Bitcoin right now. You have BlackRock. We met with actually a BlackRock rep the other day, but also Fidelity, all the big institutions, and all of crypto is 1.6 trillion. And our crystal ball, our analysts think that if these ETFs get approved, you could see in a short period of time a $10 trillion market cap, which is crazy.
Wow.
But you've seen Coinbase get sued, Binance, FTX blew up, all these scams out there. And what our fund does is we help people invest in crypto. We're third-party admin, fourth-party audited. You get a PPM, it's a hedge fund. So it's structured where a lot of accredited investors have invested into larger hedge funds in real estate, let's say. So the format, the reporting, the accountability is all this similar, where most crypto projects are scams. Like you'll go to a family party and there's this dude and it's like, dude, check out this new, and it's basically a blockchain Ponzi scam. That's like 99% stuff. But the internet was a big scam hole in the beginning too, So, but the people who figured it out and met the right people, did the right diligence, did okay, That's what we do. We help people make a lot of money with that.
That's awesome. And what do those like requirements look like to be involved in that? And as far as ETFs and blockchain goes, I mean, I've done a lot of research on it. I'm probably not as knowledgeable as you are, but is that the future for payments and transferring money and
It's
holding
just
different
software.
assets?
So, I mean, all cryptocurrency ecosystems are software. So there's going to be good software, there's going to be bad software. There's software that tracks supply chain, does transactional payments, and really, if you looked at all the software companies since the 90s, or even the 80s and 70s, most of them didn't make it, right? But if they solved the real problem, they do. And that's like part of our investing thesis is we try to look for, at least for our real high upside projects, things that have a docs team with a historical, technological history of experience, and then also a roadmap that's viable and functional utility. If it has all those things, it's great. Now, the problem with our fund, I tell you, is it's only open to accredited investors because the government doesn't want people investing with their life savings that doesn't have a lot and lose it and then be like, oh man, because crypto is really bouncy, it goes up, drops at 80%. It's just, but then again, Apple drops 51% in 2001 in September in one day. So, tech is kind of tech, and it's just tech. It's tech software in my mind.
Yeah, we're well aware of accredited investors. We do 506B syndications, usually where we've had an intimate knowledge of where they are financially and have had that conversation. It's documented in the past, and we know that they're going to put their money in and they know us and everything else. Right now, we're starting 506C, where we can actually just tell the world, but we can only admit people that are accredited, that have $1 million net worth and 300,000 as a couple income with reasonable expectations to continue. And it's the exact thing, you don't want them to spend their life savings and get stuck. We're developing on an island right now in Honduras. That's a little bit more risky than the apartments in New Mexico that are guaranteed to have working class people be able to afford it. So different thing. So how does somebody go about buying into your, what'd you call it, a fund syndication?
Yeah, if they go to uglyunicornfund.com, they can watch a video of the full walkthrough of what we do and how our thesis works. And they can fill out a little application there, and then we can validate their accredited. We do an KYC and an AML check. We send them a PPM. They can look at it. Their attorney can look at it. Their CPA can look at it. Ask us a million questions, and if everybody's comfortable, then they can engage with us.
What's the assets under management on that? What's the total right now?
This fund is similar. It's structured like you were talking about, so we can actually advertise. We're allowed 100 investors with $100 million cap on this starter fund. We have a secondary fund that we're going to be launching because we are almost 80% full with this fund. And that'll be for qualified purchasers only, but we can have 2,000 investors and we don't advertise. But now that we have a track record behind us, right now, this fund is probably at a little over 17 million as of this last couple of days. And it'll cap out, I think, pretty fast in this bull run and be full. But then the secondary fund will launch. Now, for people that are home gamers, a lot of people that are watching, a lot of people aren't accredited, right? And they're wondering how to engage in crypto. It's the number one question I get. And when they're ready, if they have enough to be an accredited investor, they can talk to me. But meanwhile, I give a lot of information for free. And I'll give you a quick summary here in 30 seconds. One, don't keep a lot of money on Coinbase or Binance and stuff like that. And the reason is I've gotten like 4 text messages in the last month. People have been hacked for over 200,000. They usually will steal, SIM hack you, steal your email, and then take your money. And Coinbase isn't responsible for it if it's like consumer negligence, they say, right? It's in the terms. So it really pains me. I saw one guy got hacked for 400 grand. That was his like 90% of his life savings.
Oh, wow.
Crazy. Because he wanted to earn 5%. They're paying a little over 5% yield on their cash, right? You hold USDC. And so he's like, that's a good place to store it. And then he gets hacked. It's like, geez. The second thing is use a hardware wallet. There's one called a Ledger, and there's all this news about how they're not totally secure. It's how you function, use hardware wallets. So I recommend people create one on one of these hardware devices and only send funds there, right? For storage. Don't transact with that hardware key with projects and things like them connected to anything. And then just set it, write down your seed key and forget about it after you have it all backed up, That's probably the safest way if a guy just wants to store it. But here's the problem. Retirement is the subject of this podcast. And if you hold, let's say, $1 million in Bitcoin, you earn zero yield, zero, right? But if you have $1 million piece of real estate, you charge rent, right? So that's good, right? I mean, good. So what we do in our fund is we provide liquidity for decentralized exchanges. So they're like Coinbase, except they're not a big corporation. Hence, a lot of people like that because they're not afraid of it going bankrupt, And we provide the liquidity. So someone wants to trade from Ethereum to Bitcoin, they're using a lot of our funds, right? We make a fee, an exchange fee, and then we pay that back, the majority of that back to our investors. So when Bitcoin dropped 70% this last bear cycle, last year and a half, we only corrected 17%. So we outpaced the market by 53% on the bear market, which people were like, that's amazing. Now on the upside, we've made our investors over 60% this year, which is pretty friggin' awesome, considering that we had some chop too, So
Yeah, it's been a weird year for us as a whole. Didn't know what
yeah.
direction it was going there.
That's incredible.
I am curious, Dan. Passive income, is this industrial real estate? What do you got as far as passive income kind of working for you currently?
Only true, I mean, close to passive. There's no true passive income, like true. You still have to keep an eye on things a little, even if it's just a little. You don't want to just set it and forget it. But right now, a lot of the buildings that we bought in the 2017 era and 2008 and 9 era are great. I mean, some of these buildings we bought just crap holes for $500,000. They're worth 2.5, 3 million now. And a lot of them are fully 195% rented out. When they get too debilitated, I'll just blow them up and build something fresh on it, but we try to get every drop we can. But what's nice about that is I always make sure I use a property management company, and they usually charge about, I don't know, 5 to 8%, depending on the services they give you, But if it's a good one, you don't even have to fill your tenants. You don't have to bug people, And then I always queue up to sell buildings if I see a new one that I want, so I can do 1031, where you sell a building, you buy it in a certain time frame, and you have some tax benefits,
Mhm.
But a lot of people don't think about this because the problem with retirement is when you have cash flow coming in, you have a tax problem, right? And real estate's great because you can depreciate it. There's a thing called accelerated cost segregation. So like if I buy this building for $6.5 million, I got $3 million write-off the first year. Freaking awesome, So all that passive income, you want to try to offset it with good depreciation. So more real estate, helps with that. But most of the other income still active. You can't, well, I guess our fund is sort of passive for investors because we do the work. That's why people like funds. We do all the work on the crypto, and then they just look at their statement every 2 weeks and they're like, okay, as long as it's performing, stay in,
That's funny.
Yeah.
So Anthony and I are both realtors. Have you ever done any purchases with crypto on real estate?
No, not at this point. I mean, most the guys that want to sell, I mean, you'll see up to like some psycho dude be like, hey, I'll take Bitcoin, send it to me right now in my wallet, I'll give you the whatever. But like as of right now, it's slow diligence to buy building, it's slow diligence to get financing, it's slow. And crypto, you just mix that in the mix for buying real estate. Well, it's a waste of time. Like even for our fund, we're like, just wire US dollars to our bank and then you rock and roll. And it's like, well, I go through all this rigmarole until it's a full integration into the system, right?
Which could be years down the line, but it could be very possible. It seems like what cryptos, and I don't know how much you can talk about this. I try to do this with the
Well, this podcast is for educational purposes and not investing advice in any way.
not
Now you can
investing
talk about
advice.
whatever you want.
Okay, yeah, I'm just wondering like what crypto and I don't know if crypto and ETFs are different or not, but what cryptos out there provide great utility that you're kind of looking at, and is Bitcoin one of those with high utility that kind
But
of fills a
Bitcoin has no
void?
utility. Bitcoin is a storage of wealth, and that's it. It does pretty much nothing. I mean, they've put a few like NFT type of things on there and some data, but it's just a storage of wealth. It's like
Right.
not all that functional. Ethereum is one of the biggest blockchains out there. It's number 2, and there's a lot of projects being built under Ethereum. And then we have what we call L2, which are like layer 2 stuff. And you have a lot of smaller ecosystems with a lot of projects, some specialized like in banking, supply chain tracking, all kinds of things there. As a hedge fund manager, I can't give token recommendations, but I can give people kind of broad market knowledge. And the broad market knowledge is this: you don't even have to be a major genius to engage crypto. I think if you look at the top market cap projects and do your research and only invest what you're willing to lose, so it's usually small amounts for people, but it doesn't take that small amount. When I bought Bitcoin, I put like a little over 25 grand to it. It was between $170 and 130 and 170 of Bitcoin. It didn't require like life-changing money to create life-changing money.
Mhm.
And if I lost it, I'm like, well, I could have ate a nice steak dinner or had a couple of drinks and the same thing, I mean, or vacation to the family, Disneyland, same price, right?
Right.
Skip one vacation, plan your future, maybe,
Yeah. You never know. There's probably going to be tons of crypto with great utility, like you're talking about. That once it finally sticks and makes it through all the stuff, it'll probably blow up. I mean, I kind of stress about it because I feel like I'm behind and I need to be in it, So
You're pretty young, dude. You're getting started.
yeah, I need to make some
Expect to get your
time.
ass kicked like 5 to 10 times between now and our age,
That's awesome. That's how you learn.
or more.
Yeah, looking forward to it.
It's fun. Get my butt kicked all the time, but you just don't look backwards at screws with your neck, and you just learn from, and you frame out and write down all what you learned, and just don't do anything illegal. So you don't want a free orange suit.
We had a guy that was very smart about crypto. He's a crypto he was an SEC attorney. Like he was able to do syndications and stuff like that, and spoke at one of the RIAs. And he basically said, you know what, right now there's a lot of instability in the market, but what you need to do is eventually find the Google or the Apple or the one that just one of them's going to blow up. And when we figure that out, that's the big upside.
What I did actually in the very beginning of it is I did what I call, I don't recommend you do this, but I did it. It's called the crap coin spread. And so basically you look at the, top 20 projects that are out there and you just shotgun blast it and forget that you had it. And one of them actually that we hit in the crap coin spread is in 2014. We didn't buy this actually typically, but when we were mining, Dogecoin was the easiest thing to mine and most profitable. And so we mined Dogecoin and then hung on to a lot of it until the bull run. I mean, back in the, a couple years ago, and it was lucky. But that was pure luck, man, or stupidity, but it turned out okay.
I actually have a similar experience. They got TikTok and all that stuff nowadays, and I was scrolling through TikTok one day and I kept seeing this thing about SafeMoon. Safeman was like a crap coin, and it was worth like 0.000 something. And I put 3 grand into it, and like within 2 weeks, it turned into like $80,000. And
Oh,
I ended up selling it. It was on Trust Wallet. Trust Wallet.
good thing you sold it, dude.
I sold it. I was like, could I make it to 100K? And then I was like, don't be greedy, just sell it. And
I
Trust
duplex.
Wallet had some, well, the problem was Trust Wallet had some hidden fee. I got like half of the profit and then transferred it to Binance. Binance took months to verify my ID. The day they verified my ID, Bitcoin crashed. Like, but it was still a good profit at the end. All said and done, it was awesome. But pure
Good.
luck, and it was like a pump and dump for sure. But
Good thing you don't own it now.
yeah, yeah, it's a good thing I'm out. So any profit's a profit. It's good. I'll take it. Other than crypto, industrial real estate, and PC laptops, what other things do you got going on? Projects or anything cool you're working on?
A big one is, I constantly buy stocks every single month. Not a lot always, but a small percentage of my income. I think that's always a healthy thing to do. Stocks, a little crypto. But really, a lot of people ask, well, how is it allocated, Dad? I'm 52 years old, so 75% is real estate, excluding businesses. But when you're talking stuff that's not under my control, is mainly real estate. But again, now the younger you are, the higher your risk portfolio. When you're younger, I think you can take more risks because you have more time to earn it back. The older you get, and also your bandwidth is not there to babysit too many detailed things you have to actively manage. But you have to treat, though, when I talk about passive, you still have to treat everything like it's a business. So even if you have a real estate portfolio and you have a management company, it's still business. So it's not like you want to disappear for 20 years and because you'll come back and probably got embezzled from and got charged 5,000 times the management fees you should have. And you know what I'm saying? Like, you got to pay attention, especially on your tax stuff, because if you just sign stuff without reading it, you could go to jail.
Yeah, we have
Yeah.
about 6 property managers that we work with at Monument at my company, and it is a constant communication. Like this morning, we're on a group text, and I've probably got 20 texts to one of the managers where we're letting them know that we've finished the remodel and it's ready to go, and updating constantly, like how many units are vacant, why is this unit fixed and vacant, what do we have to do we have to lower the price, like super active, where a lot of people just kind of set it and forget it, and you can't really trust a property management company. They're never like going to be perfect unless you make them be perfect. You have to call them on their mistakes. You have to figure out what the problems are, and you have to point, you'll be the squeaky wheel that gets the grease, but you have to point it out, and this is unacceptable and we need to fix this. And we do so many things above and beyond just letting them have a go at it.
Yeah, I always joke with my wife, because I don't know, I'm not super religious, but in the Bible it says that man was cursed to toil the soil, and women. So, it's tough. It's tough to truly retire if you have a lot of stuff. And speaking about that, like I have one mentor named Jeff, and he's got crazy amount of assets, probably over $1 billion now in real estate and everything. And Jeff, he's 72 now, and he's like, man, I'm all about simplification, So he's really simplified his assets, though, quite a bit. And again, and that typically goes with age. You move more to that simplification, but your returns a lot of times aren't as high per dollar. But then you don't need them to be, right? You need them just to be preserved and growing at a decent pace.
That's cool. I think simplification is something everybody finds later on in their life, where before it's like you can deal with the drama and the headaches and everything else, and as you get older, it's like, I just don't have that in my bandwidth. I can't deal with that during the day and then come home happy. So
Yeah, and do you remember when we met at the retirement home? I came up to you, you were driving the turquoise Tesla.
My parents' one they were at?
Yeah.
Oh, maybe. It's been a while, yeah.
That's where I originally met you. I don't know if you ever remember that, but I was just some punk kid and I was like, "Hey man, nice Tesla." And just got into real estate. I was telling you about everything. And that's when I found out you were PC Laptops, founder.
Yeah.
Like, that's kind of cool.
What's your role in PC laptops right now?
Babysitting. No. I've got a president there, and also Xidax, the bigger tech company. And the big thing is just road mapping product, where they're going, and in any company, you'll have your marketing guys and girls, your salespeople, your operations, your finance, your logistics people, your customer service support people, and so it's constantly going from one of those departments to another to optimize and make sure all the standard operating procedures are written, being followed. And really, in a business, you have traffic and you have closes, right? So you either have leads and you have closes, and so you have to constantly work on those two halves on the front end of it. So, but it's really important if you're selling products, you got to make sure you have really great products, and that means reading through every customer complaint, and then and graphing that, and then solving more problems by creating processes based on customer feedback, right? Loop around. And that's a lot of work, but it's fun, just connecting the dots and doing what you need to do to make it happen. But any business, real estate, tech, all that requires similar type of things. Even running a hedge fund, you have to have interested people who want to invest. You got to find them somewhere, and then you got to solve their problems. And usually their problem, like with crypto, is like they've gotten destroyed or rugged or whatever, or but they want to be involved with it, but they want safety and security. So in our field, the problem that people have is safety, security, downside risk mitigation. They don't want to lose it all, in one crazy adjustment. So by solving those problems, most of the other funds that we compete with are trading funds. So there are a bunch of dudes who are like trading crypto all day and think their crystal ball is working. And I don't know of that many traders that have been wealthy more than a decade or two. I just don't. But I know 99% of my circle are people that have been doing business for 2, 3, 4 decades, and every year is usually pretty good. Most, like 99% of the time. I mean, you do have those recessionary year or twos, but overall, But the problem is now is a lot of everyone's looking for this short cycle of quick buck, subsidized money, blah blah blah. And it was funny. I was sitting with Michael Wolf. He has more storage units than anybody I know, and we were just talking about this, how like people, there's a lot of times they're just so impatient and wanting this get rich quick, where get rich slow is like building your house on a rock instead of like mushy sand, but people don't, they just want it so fast. Now I think people can get money fast, just take profits like that coin you mentioned, and then put it in boring stuff and then forget about that, just let it grow, and maintain it, but it's a weird philosophy.
That's my generation summarized in a sentence is everyone's looking for that get rich quick scheme, and see all the mentors advertising classes, and I've come to realize it's not real for me. I try to focus on like just get better by 1% a day over a year, 365% better if you can just do 1%.
The most important thing for young people is to be clear on physical, financial, and spiritual goals, whatever you want, and then map out exactly what needs to happen to deem yourself successful in that area. And then you have to put a timeline. So within a year, 2 years, 3, 4, 5, and then schedule all the actions onto your phone that you need to do. And then you'll eat that elephant one bite at a time. 10 years will go by. You're like, crap, I got $50 million now. And crap, this is great, dude. Like it didn't even feel that way, but you're still eating frugal. You're still driving something fairly reliable, and you're living in a modest home, and you're not YOLOing all day or buying bottles of weird alcohol for randoms. You're just focusing on what, and then your meditation is working out, man, and taking care of yourself and eating right. Then you'll just scale more. You'll just print more and more and more.
Awesome. What physical, spiritual? I know you
Mhm.
said something about meditation. I know you do a little bit of that stuff. How important do you think that is to, and maybe it's more for mental clarity or
It's everything. I think like making money is cool, but you have to schedule every day 30 minutes to exercise. You have to know everything that you put in your face to eat. Like you have to meticulously monitor that like a company, because your body is a company in a sense. And the more energy and power you have, the quicker you can execute and outflank any competitor. Most guys my age at 52 are just like barely can walk, man.
yeah.
I can hike up anything all day freaking long. I can cold plunge it, red light it, freaking full stack it at the gym. I mean, all this is like, I'll get into MMA. I don't freaking care. Like, and not that I'm trying to impress you, but impress upon you that I learned this because the older mentors, some of these guys are 70, 80, and for their age, I mean, they are vascular and smart. Their brain is sharp as a tack. So I think that's why most of us as entrepreneurs tend to like tap out. And that's because we don't have the energy anymore, right? But if you have the energy, people are like, Dan, how do you do this? Like sometimes I'll get up at 4:30 a.m., get done sometimes with my calls at 11 at night sometimes. And that's freaking fine with me a few days a week. You do need to have days where you're rested more, but I can output more now than when I was 25, and I'm a lot more experienced. So I don't have to like brute force it as much. So I'd say like that physical thing, but don't let that physical thing, don't be a gym rat where like you really think you need to work out heavy more than 30 minutes to an hour a day. Anything beyond that's like kind of diminishing returns. You're probably wearing your joints out. Just get a good 30 minutes. Even if you can walk your dog really fast for 30 minutes minimum, fine. Cool. My pug will be happy. So it's like,
Two birds, one stone.
and then killing all sugar. Oh, that's a big one. Like not all, but just really focusing your eating clean, grass finished meats and proteins and vitamins, getting your blood work checked, knowing what your glucose, your cholesterol is, your A1Cs, your testosterone. And that's a big thing with dudes. Like if you are a guy past 40, your testosterone's going down, you should go to a doctor, get it checked, because that will kill your productivity 90%. You'll start gaining weight, you'll work out, your arms will be buggy whips. But if you check out my Instagram, and I'm not like Arnold Schwarzenegger or Bruce Lee or anything, but my energy's like freaking nuts. So, but
Yeah,
that's how you do it.
we see that a
Energy's
lot
everything.
in like the seminars we go to. Like we'll go to Miami for Fund Launch Live or something like that. And it's a big real estate thing. We'll have multi-days and you can
That's
watch
Bridger,
people.
that's Bridger, my fund partner, my 50-50 partner. Bridger Pennington is my 50-50 partner.
Yeah, Bridger Pennington's awesome, and he's taught a lot of people about funds. And it was kind of funny because I had a really good friend named Earl that's a motorcycle guy that owns apartments with us, and I'm like, dude, we have to go to Bridger's thing in Miami. And he's like, I'm like, dude, there's going to be like 2,500 people that are in funds that are doing this, that, they might invest with us or we might learn from them. And, to the point, he was like, I don't know. I'm like, dude, we could go to Miami, rent Harleys and go down to Key West after the event and then just have a good time. He's like, send me that link again. And so, yeah, we went to Fun Launch Live. But the point is when you go to something like that, you have to like have the energy to go through conversation after conversation. And long after the fund is like the daily seminar about the fund is over, you're still out there networking or you're tired and going home. So you have to have the energy to be able to last, to actually get to the good conversations that you'll have. So definitely a big believer in that.
That's why, Anthony, for kids your age, don't drink alcohol, don't smoke weed, don't do anything like that just screws with your brain. A lot of people say it relaxes me. Dude, if you're stressed out, seriously, run as hard as you can, like Forrest Gump, for like 5 minutes or even 2 minutes, even a minute, and you will be in a different mental state.
Keep it natural. I like that. I like that you said that. I think we need to hear that, us young people. See a lot of us going in weird directions, especially now. World's changed. I want to know what gave you that mental tick. What gave you that like mind? I don't know if it's a mindset or if it's a tick or if you're born with it. How can somebody like me, younger or older, develop that like growth kind of mindset, you know, whether it's physical, spiritual, mental, business, developing assets over 10 years of time? What gave you that like mindset of just always getting a little bit better? And this kind of goes back to like there's no overnight success. It's all a long-term game.
Well, sadness is caused by impotent goals, right? Anxiety, sadness, some depression. Because if you're not clear on where you want to go, you feel like you're just running around in circles and you just
Yeah.
don't feel like you have any purpose. So I encourage you to like take a day, go to the mountains or somewhere alone. Don't bring anybody and just write down what you want to become and get it in writing. And that'll give you some clarity and take actions towards that every day in the calendar, like I told you. And it doesn't, you can set insane goals, like big, BHACs, big hairy ass goals, but you can also have small victories. And if you make attainment, let's say you want to put on 15 pounds of muscle and lose 20 pounds in fat or something. You go move a pound or so in either direction and celebrate. Be like, okay, that's great. Tell yourself, I'm making progress. Cool. Log that, and then a year from now, you'll be freaking ripped, and your energy will be up and you'll be like, wow, that was not too bad. It took a year, but not 5 minutes, But that's, if you can be disciplined physically, you can be disciplined mentally with business, and then spiritually, give yourself the time you need to do what you need to do there too. So it's just planning and executing.
I think it's the hardest thing for somebody like getting started to actually write down and believe in their big, hairy, audacious goal. Like if Anthony could take anything from this, it'd be like, you have to say, I'm going to be worth, and believe in it. Like I'm going to be worth 50 million might sound just crazy and impossible, but you still have to write that down as your goal in your roadmap so that you have some place to go and you can achieve that. And the analogy is used all the time. Like, you'd never drive to New York without a roadmap. Why would you live your life without a roadmap? But driving to New York sounds easy. It's kind of hard to say, I'm going to be a billionaire. I'm going to have 3 commas in my net worth. And we, often just can't put that down and believe in it, even though when you get older and you've had certain achievements, you're like, okay, now this direction, if you apply that to physical, I already know I can do financial. So now I can apply that to my physical goals or my mental goals or my family goals, whatever. And so it's really hard to start and believe in it. But once you get some of that momentum behind you, then you can go ahead and move forward. Like, your third business is a lot easier than your first business. Your third time of losing weight is a lot easier than your first time, and you just believe and go.
Like it. You guys are the vets out here. You guys are
I
the
think it's great to have
masters.
you on here because I want to inspire you, and it's cool that we're both realtors at the same place, and I can kind of impart knowledge. Like,
Yeah, this is awesome for me. I mean, I gotta chat with people like Dan. Dan's freaking
cool.
so awesome.
To be respectful of all
Really
of our
cool dude.
times, why don't you lead us into the final 4, Anthony?
Yeah, Final Four. All right, Dan, you ready? Got
Okay,
4
so
big questions for you. What is your favorite business book?
it's actually not a business book, but it's just how to win friends and influence people. Right. I mean, that's a great book because that's really what influence is, what it's about, to make things happen,
Yeah,
I mean,
that's a great book.
that's the number one skill.
How to Win Friends
I
and
totally
Influence People.
agree. We had a local RIA event where the speaker was like a life coach. And, when you say fix and flip, it's like everybody shows up. When you talk about wholesaling or making a bunch of money in syndication, everybody shows up, and there was very low attendance. And I'm like, this is my favorite topic. I love negotiation, talking to people, finding out like wants and needs. Hopefully they edit out my knee hitting the desk. And not only did I meet the speaker, I went out to lunch with her and I invited her on the podcast. And it's like, this is maybe the most interesting thing to people. But when you get down and you realize that every conversation you have is negotiating, every time you meet people, you're negotiating, you really speak differently. You choose your words better, everything else. So I love that book too. Sorry for the segue.
How to Win Friends and Influence People. Dale Carnegie, I believe. Am I right? Okay, sorry. What brings you happiness, Dan? Question number 2.
Oh, a lot of things, but the big thing is relationships with people. If I can help solve problems for people or help them solve their own problems and stuff, if it's reciprocal, that's nice. But also, spending time with family but teaching is great. But I like to bring teams to success. So if I've had a few of my employees the last few years are like, dude, I made it. I made $1 million now. I'm like, wow, cool, dude. What next? But it's great helping, be part of helping other people be successful. And then obviously spending great time with family and having great experiences with them and teaching the kids and things like that. That's all super rewarding. And then stuff like this is fun. Maybe we can help a few people out there, younger and older people, have some insight. So
awesome. Question number 3. What does your future retirement look like, or do you have a future retirement?
Yeah, I mean, retirement's an interesting definition. I think there'll always be projects that I'm working on, just the degree of the interest that I have in those projects. So the hedge fund will probably continue to scale. Our goal is to smash through $1 billion in the next 24 months with the fund under AUM. So, so that'll be fun. Tech companies continue to scale those, as well. Real estate portfolio continue to grow that. I don't think there's a official retirement event. Every single one of my old mentors that have retired have unretired within a year or so to, just because they get bored, right? It's like you got to feel like you got to use your Jedi Force skills for something. They don't really do any good alone in the mountains.
Right. Good answer.
Right.
And what is the best way to give back, in your opinion?
The best way to give is to teach. Because I'm all about certain charities, though, for certain things. That's fine to help kids that are being kidnapped or dogs and cats and stuff. But people, you got to teach them. And they got to learn to be productive on their own and to be able to teach other people. Now, you do have, innocent people that may not have the mind, or they're injured or something. I get that. And it's important to donate to those causes, though. But most people, if they're just conscious and are able and help, they could do a lot, and giving those people handouts is the worst thing you can do. It's empowering and educating. But at the end of the day, they got to change themselves,
Right. It's like the saying, give a man a fish and he'll eat for the day. Teach a man a fish, he'll eat for the rest of his life. Something like that, right? I don't know.
Exactly. Yep.
Trying to put in a little catch line there. Well, that about wraps it up. Roger, any other questions you may have for Dan?
No, I'll just wrap up. So once again, we had Dan Young today on the Retire Wealthy and Happy podcast. We really appreciate you.
I think that's it, Dan. Thank you so much. It's been an honor.
Yes.
Really appreciate the time and the knowledge, and you're a cool dude. You're an awesome dude, and
Thanks,
I really
man.
appreciate you being on.
Go make the world better, guys.
We really appreciate you being on, and we'll see everybody else on the next podcast. Have a good one.
Hope you got value from this episode. And if you have a minute, then take the time to leave an honest written review for the podcast, because we take those reviews seriously and it'll help us serve you better on the next episodes. And most importantly, be sure to start taking action so you can control your financial future today.